Hello, 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 everyone. How's everyone doing today? Happy Tuesday, little turnaround Tuesday. We got Bob on in a couple minutes. Last appearance for the week for Bob. George says you better not call, you better not buy, don't even invest in the spiders because Santa Claus ain't coming to town. No Santa rally from George. George gets a lump of coal. Good afternoon, Patrick. Good afternoon, Jacob. Hey, CD. Good evening, Anissa. Hey, AP's World. And the people who hide in the background. Good afternoon to you, too. By the way, if you are hiding and you're just checking us out and you like what we do, please do consider subscribing, ringing that bell, and hitting the like button. I will bring Bob on in a minute. Liquid Vistas. Howdy, howdy, howdy. Here we are again. I thought it said here we go again. I was going to start singing a song with that one. So we had some stuff going on today. Nothing much else economic besides the 80 API crude oil stock numbers with the little draw there. Tomorrow we got mortgage info. We got existing home sales. We got consumer confidence, the consumer board consumer confidence numbers. And then we're setting up for major numbers Thursday and Friday morning. So tomorrow's again a quieter day. Going into big numbers on Thursday and Friday. The market map, Apple roughly flat, Microsoft little bounce. Tesla still getting hammered. Bad insurance numbers out of China. Disappointing, and that's how you can track the registrations via the insurance numbers, and disappointing out of there. Little bounce with some oil and energy stocks. Besides Wells Fargo, which bad news out for them, which Sterling highlighted this morning. Other little bounce in banks. With your sectors, energy, strongest sector, followed by basic materials, followed by financials. Bounce in comm services, but consumer cyclical still getting hammered. Fed watch climbing back to 70%, nearly 70% for the 25 basis point. Still in fear mode. We had Nike and FedEx. Nike beat, FedEx beat on EPS. I think they missed on revenue. It looks like they're guiding slightly lower, but the conference call is going to be important. They did hit the first target on the double top. Did not check out BlackBerry or anything else. Tomorrow morning, not much going on from anything market moving. Tomorrow after the close, Micron for those semi players. All right, with that. Let's see who else is here. Good morning, John. Isn't it afternoon or evening, John? Depending on what time zone you're on. Thank you for being here, John. Ted's back with his right account. Howdy, good sir. Not with the other account that you had. Okay. The Liquid Vistas account. All right. With that, I'm bringing on Bob. Bring it on, Bob. We're back in guest mode. There we go. Last time, Bob's deserting us on Thursday. He's going to leave us hanging, not knowing what to make of GDP, not knowing what to expect for PCE numbers. We're going to be flapping in the wind.
Usually, you guys will be fine on the least important PCE numbers of the year.
Way to ruin it. Everybody go home for the year. We're done. Bob, are you traveling at all?
Yeah, I'm coming to sunny Chicago.
You're coming to the blizzard that's hitting Thursday and Friday in Chicago. 35 below, wind chills, 10 to 14 inches of snow. Are you ready, Florida boy?
I don't pray often, but right now I've been praying quite a bit for flight cancellations tonight.
Oh, there won't be any tonight. The weather's it's 39 degrees, a little overcast, and there's nothing in the schedule. You're going to land, then it's going to hit. So
yeah, not fun.
So actually, say your prayers because I would pray that it would miss. I would rather not have with the dogs those kind of cold temperatures with that snow combo.
Yeah, it's difficult. I mean, even just letting them out to do their business, you got to be careful with them. You got to put the coats on them. You got to put the booties on them if you have them.
They won't wear booties. And then they get
Yeah,
frozen
mine
paw.
never would either.
They
Mine never
get
would either.
they get frozen paw and then stand there in the middle of the with three paws down. They hold one paw up. They stand there looking at you, and you're like,
Yeah,
what?
yeah.
And then I'm trying to
The
carry
only
in
time
one
I
of
had
them
to
who's
like
100 pounds.
when I lived in the West Loop of Chicago, and it was during that polar vortex. My building had a heated parking garage down on the lower level. I took my dog down there and let her do her business down there and just left it. I mean, I picked up the number twos, and then after a couple of days, I'd bring a bucket of hot water from my unit and just kind of rinse it down the drain that was in the garage. But I didn't even take her outside when that was the case.
Yeah, I'm prepared for some accidents in the house. We got all the puppy pads ready just because it's. I mean, when it gets that cold, I don't even want to go out.
Um, so some of your dogs might need some pretty big puppy pads.
Well, and my wife will tell you that I might need some pretty big puppy pads. So, uh, what's this? Sterling, forgive the cynicism in the following comment. Please, only a U.S. federal government agency could spend this much money. Postal Service will electrify by 2026 and will spend 10 billion dollars for 66,000 EVs and infrastructure.
Just think, it'll
That's
only take 78 years.
151,515 per vehicle. Well, and infrastructure, they're going to have to put in some fancy charging stations and electrical stuff. So, I don't know.
They did the calculations. It's only going to take 78 years for them to pay off the electric vehicles.
It's going to be so fascinating though. The batteries are going to degrade so much before they ever.
Yeah.
I mean, if they're going to keep these vehicles more like 8 years, they're screwed. Oh well. Oh well. Hey Bob, what do you think of the?
Yeah.
What do you think the financial economy will? Hey, do you think the financial economy will fail because of what Japan did right now, but not right now, but in the long run? And they're talking about changing the the peg on the 10-year, widening the bands to 50 basis points from 25.
All right. So, first of all, I want you guys to know that between March of 2009 and March of 2012, Postal Service spent approximately 341 million a year in gasoline. So it's going to take a long time to pay off those electric vehicles because we're obviously not even counting the cost of
Yay!
charging them. No, I don't think the financial economy will fail because of what Japan just did. I think what Japan just did is clearly a signal that they're moving away from easy monetary policy. They've finally gotten to 2% inflation and an excess, and this is a little bit of a victory lap. The interesting thing is they're still engaging in yield curve control. They actually doubled the amount of um, quantitative easing they'll do to protect that higher band. So they moved the band up, and they basically said, I dare you to bring it up to the band. The JGBs didn't get up there, at least earlier today. I didn't look at them late in the day, but they didn't get up to the 50 basis point yield. The yen
No,
strength
they
didn't.
topped out below 45. They topped out at about 43 basis
All right,
points,
so
and they
it's right
closed
at
at
50.
40 and a half basis points.
Okay, so the JGB basically said, look, we're going to buy every single thing there. When they doubled the amount, they basically doubled it to way more than the JGBs would ever trade. So they basically said, go ahead, test us. We're not going to let it above 50, but it will moderate above 50. It's actually a very intelligent way to exit a very stupid policy altogether. Um, so it's kind of like, let's say you had your entire diet was 10 cakes a day, full sugar, buttercream frosting, and you said, all right, I'm going to cut it to 7 cakes a day. I mean, it's good for you. Still awful, but good for you. But it won't cause the financial system to fail. It is basically the Bank of Japan jumping on board with the other central banks as best they can. And they did it in a very kind of a weak way, right? Because they're still engaged in yield curve control. They just expanded the band. So, no. The funny thing about it was this will actually take Japanese money out of the global markets to a certain degree. Because with the strength in the yen, one of the things that excuse me, Japanese investors was pretty comfortable doing was hedging their currency exposure and buying foreign treasuries so they could get that extra yield. Even with the hedging exposure, they still made out. With this particular move in the yen and potential moves in the future with 50 basis points, they may keep more of their money domestic. So it takes some Japanese money out of the economy. It remains to be seen how much out of the global economy.
Uh, Pavneet says he thinks Santa got stuck in the chimney. Remember, historically, the Santa rally doesn't start till after Christmas, so we shall see.
Right. This is not the dates for the Santa Rally. The Santa Rally is the week between Christmas and New Year and the first couple of days after New Year. That's
And you
technically when
then
they.
you roll into, if you're going to get it, the January effect, which is the upwards bias right at the beginning of January.
It's interesting. The January effect. Well, I shouldn't say that. That this year we don't have the January effect, but what we do have is as January goes, so goes the year in about 50% of those years. If January is down, the year ends up down. But if January and February are both down, the year ends up down upwards of 63% of the time. So both January and February were lower this year in equities. And obviously, we're finishing the year lower. Although before Coco asks, yes, I'm not stopped out yet.
You're not stopped out yet?
I'm not stopped out yet because we didn't get down to my target.
But you must be counting on the Santa rally then.
Well, I mean, I'm counting on not getting stopped out. If I do, it'll be break even. It's no big deal.
But what if the world blows up and it gaps below your stop price?
Well, then I'll get stopped out at a small loss. Everything's gonna be fine.
I'm just messing.
I know.
These are the kind of questions I get all the time. Move stop with break even. Well, what if this happens? Okay, then that happened. I can't forecast that.
Yeah. You can't control every market condition, which is why you plan your trade out prior to entering it, and you
Yes,
try to your
and yes, you can always get slippage. Just like sometimes you get positive slippage with targets. So I've had stuff with a target and then it gaps way above it. I'm like, great, positive
I had a
slippage.
friend who had the Patriots in this week's football game. And I said to him, but what if at the end, when they should just be playing for overtime, the Patriots do a double lateral that ends up with a Raiders interception and they score a touchdown, a defensive touchdown with no time left? And he looked at me like I was nuts. And that's exactly what happened. I'm making that up. Obviously, you can't predict every single scenario. So you do the best you can to prepare for it from a risk perspective, and the markets will do what they do.
Exactly. Ted, so nat gas, what do you think? Bomb cyclone supposed to hit? Which is, yes, that's the technical term for the winter blizzard that we're going to hit. These technical weather pattern, does that move the needle? What are your
The weather pattern's already known. So what the market is doing now is comparing inventories to the weather pattern that is coming, and I wouldn't worry about it. Apparently, right? Well, no, I shouldn't say apparently. Right now, nat gas, the natural gas spot market, is looking past this winter storm to what's coming afterward, which is expected to be mild weather, and supplies have built up. Inventories have increased quite a bit from where they were at when prices were rallying in August. Inventories have increased quite a bit. There's been build after build after build, and a lot of the builds have been larger than this time of year normal. So far, the winter has been mild. This storm is not mild. So if the winter weather changes post the bomb cyclone, then I would expect it to rally. But natural gas is the seasonality is very strong there, and they just basically watch the weather and trade it. I don't really trade natural gas off of fundamentals at all. There's
Uh,
just it's
yeah,
weather.
I just looked at the long range forecast for January, February, March, and the northern plains have below normal forecast, but the rest of the country pretty much has above normal forecast for temperature.
Right.
Now that can
Right.
always change and be wrong, but based off of that next January, February, March pattern, it favors more choppy to down fundamentals for natural gas. So rallies, sharp, especially sharp rallies, I'd be watching for topping patterns for any short setups.
Right.
From a fundamental standpoint, it could not hold the 200, retested it to the downside and collapsed back down. So I'm now watching between this 475 and 510 area for a bottom, at least going into the next few days. What else do we have? Well, uh, we can't answer that question.
I can't read it.
Mike Bob, Mary Love Kill, Kathy Wood, Janet Yellen, Elizabeth Warren.
Oh, that's easy. Wait, Mary Love Kill? Oh,
Yeah, you got it.
he doesn't want to say the word.
See,
Well, I know I kill.
can you? I don't think we should talk about who we kill on a live stream. I don't think we
I
want to
just
go
want
there.
everyone to notice how much. I just want everyone to notice how much she cares about shareholders now. All of a sudden, she cares about shareholders.
Look, she's just a.
I mean, before it was like, why would I help the millionaires and billionaires that own stock? And now she's worried about Tesla's price. She's very worried about it, Mike.
I know.
She's worried about the fiduciary duty that Elon Musk has to Tesla.
Well, Tesla's board should be worried about that.
I agree. Well, my point is, she all of a sudden is worried about shareholders.
I know. She's just. You know what? It's. By the way,
she's one of the worst of the worst.
Speaking of
One of the
Kathy
worst
Wood, everybody,
Yeah.
we broke below
By the way,
the.
I'd marry Janet Yellen.
Huh?
I'd marry Janet Yellen. So we got that all figured out.
Okay. Taking one for the team.
The 80-year-old. My wife just gave me a really dirty look. She's the 80-year-old Treasury Secretary of the U.S.
Bob taking it for the team. All right. By the way, Kathy Wood, if you invested since essentially late summer of 17, you're underwater now if you didn't get out.
All the way from 2017.
17.
Wow.
So if you've been in there anytime since, you're underwater.
Wow.
Oh, poor Kathy made the round trip. Thank you for playing, everybody.
Thank you.
I don't think it's over yet. Let's see. Bob's stock value just dropped.
Who's did?
Your stock value just dropped according to Sterling.
I'm not sure which part he's referencing, but
41 years, 2 weeks from the 12/7/81 snowstorm. I still remember the snowstorms of 79. Those were worse. Ugh.
yeah.
Those were brutal. Horrid. All right. What are your other thoughts going on for the rest? I mean, we got the slowing down of markets, but we still have GDP numbers coming out, PCE numbers. You said the PCE numbers are the least important of the year.
Yeah, first of all, obviously they're revisions. Same with the GDP. We need next year's numbers. These aren't going to move the needle on the February rate meeting, so they don't matter much. Be interesting to see if they were revised up, but I suspect they won't matter much.
Do you think if they come in better than expected, they will have any impact on the movement of the market, though, in the short term?
Do I think? I mean, look, going into tomorrow and the next couple of days, the liquidity is going to dry up rapidly. I'm already looking like at the natural gas contracts volume, and today's volume was about a third the normal volume. It's already so it's already happening. Yeah, so I wouldn't worry. I mean, you know me, Mike. You and I used to take these 2 weeks off back in the day.
Yeah.
Um, we'd kind of
When
cruise
you're
our
a
shop.
famous
We're not going to
YouTuber,
be
you
too
can't
busy.
do that anymore.
I know you're a very famous YouTuber. Sterling, you wouldn't expect me to marry Kathy Wood, would you? I mean, I'd be underwater financially.
You'd be a disaster. Well, she's done fine with her fee structure. She's just lost everybody else's money.
She's supposed to be up most. Well, I guess she's not. She doesn't claim to mostly be in the fund. But Janet is rich as hell, and she's going to die soon, so it's perfect.
Oh boy, this is taking a morbid holiday turn. I mean, all right, I am now George. No more questions for George. You're done. So, uh, oh geez, what? I don't even. What the? Zelensky is expected to visit U.S. Capitol on Wednesday. All right.
Didn't Zelensky just do Stephen Colbert or something?
What is the guy? Was he at the World
Oh,
Cup? I mean, what's going
I
on?
thought I saw Zelensky. I thought I saw Zelensky on a late night talk show. I swear to God. I mean, maybe that's another one of those things where I got trolled, like when they showed Zelensky ringing the bell at the New York Stock Exchange.
Oh, it's
Um,
everything's insane. May
and then
lose.
it's funny. Somebody, I don't remember where I saw it, but there was a picture of some Ukrainian woman soldier doing like a TikTok dance in the snow, completely in all the gear, right? Face was covered, military vest on, the whole thing. And somebody commented on that video. Eventually, one of the cameras is going to slip up, and we're going to see the lights and the boom mic from the movie set for the Ukraine war.
Ah, okay.
I mean, I'm just laughing at it, but I don't comment on that stuff in public.
Uh,
All right. Any other market stuff? Because I'm going to go. I got to pack.
you got a pack to come to the Snowmageddon or the Blizzard
Again,
Mageddon. Well, all right. Well, you.
I'm sorry. Zelensky was on Letterman's show. My next guest, his Netflix show. Yeah, that's what it says here.
All right. Well, I'm not seeing any more questions. I'm just going to get through the markets real quick, and
All right.
then
I'll check the Discord, guys, but otherwise, I will see you a week from today.
a week. So you'll be on next Tuesday
Yes, sir.
and Thursday.
Yeah.
All right,
Next
next
Tuesday
week
and
back
next
to
Thursday.
normal. But no, wait, you are there's no podcast coming out, right?
No, well, there's no podcast next week. The week after, we're actually doing a sports betting podcast. So that'll be fun.
Okay, so
Yeah.
all right, we
Start
got
to branch out.
Sterling. You got Merry Christmas. George says thank you. See
Yeah.
you next week.
Merry Christmas, guys. I'm gonna let y'all go. Merry Christmas to
All
everybody, and to anyone who doesn't celebrate Christmas. And Merry Christmas anyway. We'll see.
right, there you go. Have a good one, Bob. Travel safe. All right, you're stuck with me. I'll let Bob know, Jacob. Thanks, CD. So let's get through some market stuff because you know what? There's still trading to be done. I'll let them know. We'll relay the comments. Thank you, everybody. So I mean, if the audience drops off for Thursday afternoon because it's just me in the middle of Blizzard Mageddon, then well, I can't say. You know what? If we do lose power here, because they're predicting 50 to 75 mile per hour wind gusts, but the show will go on unless I lose internet because this house is powered by backup generator. So I am prepared Full house backup generator. It's so funny when the power gets knocked out in this neighborhood. There's a couple people with generators, but I can run everything. I mean, if I wanted to, I could do the dishwasher, run the laundry, have on all the TVs, all the lights, and it would be fine. Don't know if I could. I could probably still charge the electric car. I just wouldn't. But it's funny because last time all the power was out, the whole half the street was just pitch black. I got a big front picture window, the big screen TV. You could see through there, and people were walking by and I was had the dogs out. They're like, "How are you the only one with power?" So, little side note: there will still be a live stream. The only thing that we're prohibited if the primary and backup internet went out. I don't think I could do it well enough over a cell phone hotspot. So, we got the bounce. I hope I told you exactly what I was watching for this morning. Exactly. I don't always say exactly what I'm watching for. I said the dip into 50 to 62 and a half. As long as that holds and we got some short-term momentum out of it. I did the reverse harmonics from the lows overnight back in time to the Monday night sort of afternoon area or evening area before the BOJ. Stalling out multiple times, poking above, could not get to the second harmonic, but I am watching for some follow through. The only thing that's going to disrupt the follow through at this point for me would be the close below 38.27 on a closing basis. And since it's overnight data, at least a 1 hour close. Other than that, I'm watching for follow through. Why am I watching for follow through? Because on a break above today's high, with a close above today's high, it's a percent B buy. So the break above today's high is definitely tradable, and that's only to a bounce to the rotation zone. So it's not for a major bounce. It's only a short-term bounce. So we could get a little follow through with cycles. You see the cycles at the daily clearly. Now we're clear at the bottom. We'll be watching for that turn up play. Now the weekly still is about a bit to go down. So this is where it's going to get interesting. So this would be an aggressive short-term bounce follow through. I'm not expecting anything much more than this 3,900 to 39, maybe 30 area for a bounce. If we do get the follow through tomorrow, that's about it. Unless we do something miraculously and there's a reason to hang on to something from a bullish side. So that would just be for a short-term bounce also coming out of oversold condition. NASDAQ, nearly the doji. NASDAQ cycles at the bottom, same story. The close, 11,180. We're sitting here 11,175.75 on the close. So we technically closed below the 62 and a half. So even if we get the bounce, that would be setting up. I'd be aggressively looking for a short play. Why? From a NASDAQ perspective, we could test this 10,720 area. Now, this is a double bottom that was triggered with the first stop reduction being hit. So these targets can still be utilized on follow through tomorrow. 11,248.25. I consider this target being hit right there. The high was 11,247 and then dropped back down. So since that's not a profit taking stop, you just you tighten up your stop at that point. And the stop level on a closing basis from this was 11,119. No close below there on the 1 hour. And then to walk away, if it traded back down here through 11,094.50, it would have been over. It did not. So it's still fair game to utilize this. And I'm bumping up these levels a bit for tomorrow, but if it starts moving up about 11,231, we're getting into a clear path move. So these targets can be well utilized for intraday trading. Again, what would shift me short term to get back to bearish? A close below 119.75. A close below that on at least an hourly basis. All right. Dow. Not going to go through all these right now, but with Dow, not in depth. The Dow, there is no percent B buy follow through, so on any rally, I'm just watching this 33,580 for another rollover play. Closing back right at the 50, but I'm expecting us to easily test the 200. The Russell, again, on any follow through play above today's high, it's mainly a return. I'll mark off my key level. This is the key level within the rotation zone I'm focusing on, about 797. The DAX still closing back above the 50. I'm now watching for a little pop follow through back to the rotation zone for a potential rollover play. The notes holding the 50. Holding the 50. By the way, the little double bottom, potential double bottom, still barely in play. This will probably get invalidated tonight due to this extended sideways movement. But I will leave it on there. We'll see if it gets invalidated and pull it off then. I'm pretty much, there's just not a fabulous pattern besides still a gap fill. Remember, the gap from Wednesday the 30th to Thursday the 1st still isn't filled. Don't ignore that fact. 113.07. Dollar index. This is technically in double bottom territory. So the only thing now I'm watching for is a 4-hour close above 104.54 roughly on a closing basis on the 4-hour. So, other than that, the rotation zone's still holding. You can see it's just running out of downside momentum. But we got daily cycles back to the top. VIX, not much going on with the VIX to talk about. Crude, not much to talk about there. Still the same breakout versus breakdown levels I talked before about. Not much to talk about there. Gold is still in trail mode. Has not closed below 1780. Now, clearly, even though we had things, this was not a double top. You see clearly it's in triple top. I am watching for the reconnection with this major harmonic cluster right in front of 1850. So it's still in trail mode from my perspective in trading around a core position. Still holding the rotation zone. So I love that concept. Helps keep you in things. Bitcoin, little bounce here, but back to the trying to get back into consolidation. Nothing going on there. We'll pick at a couple stocks in a second. Euro, nothing much going on here unless we break below about 105.80. If we break below there, I'm watching for a return to the bottom of the rotation zone about 105. The pound, come on. The pound. Internet's a little slow right now. I'm watching for a break below 120.87 or a break above 122.40 area. Those are either a breakout or a breakdown play. Tesla just getting still, it's just trailing down. Still watching for a bottoming pattern. Did not get one yet today. By the way, if you're wondering, I got a request for some shorter term levels for somebody who trades this short. That's where these are. And I said, this is how pathetic it is. I mean, I have to go down to a 1 hour time frame to even get the semblance of a weak pausing bar. And I'm like, these targets can change Should we get a more substantial pausing bar? But right now they're 139.19 and 132.55. I mean, look how little pausing action there's been. That's on a 1 hour. And this is weak sauce. So, yes, I'm still watching for a bottoming pattern, but now I am going to. I don't. Did somebody ask me if we were going to get to 129 or 112 this year? I got asked. I don't remember. If it was 112, I said I don't think we'll hit it this year. 129, I was going to be surprised if we hit it this year, and we might if this does continue. But what's fascinating with Tesla, look at this. When you do get the bounce, look at this. Look where the weekly's closing in on. Now, this will keep dropping. And look where the 200 is. This area, even 164 to 174, is your key resistance. That's not even returning to this higher breakdown zone or even this 190 breakdown zone. So, you might get people rushing in to celebrate a little bounce, but geez, on any bounce at this point, it might not even regain the 200 on a weekly closing basis. That's how sad Tesla's become. By the way, still lower longer term. Let's just jump. I want to check in on FedEx. Up a little after. I was wondering, it doesn't look like it's pulled back after the conference call, but we do have stop reduction that was hit today. Stop reduction. So the current stop 176.22 on a closing basis or 178.95 on a walkaway basis. I would be watching for another potential rollover play. Earnings again. So how did they beat but miss on revenue? They are implementing major cost cutting. Major cost cutting. Think about that. So they're positioning themselves clearly for stuff, and they guided for next year lower. Now, I haven't been able to hear anything on the conference call, of course, because we're doing a live stream, but I'll be watching for another rollover play. So the first target's hit there. Nike, which has actually a massive shoe inventory, but they did a beat. They beat. Consumer not tapped out yet. But I will be watching for a topping pattern in Nike. There was no good play set up going into the earnings from my perspective. But now we could be setting up a very nice topping pattern if it doesn't get much follow through tomorrow. So I will be keeping an eye on that. General Mills, by the way, didn't get a chance to talk about this morning, and it gapped. It did potential double gapping, and just that was not tradable. But return to 50. What was interesting with this is you see a beat. Well, why the big gap lower? Because their volumes are way down. They've been able to pass more of the inflation onto the consumer, but the consumer is purchasing less. And they're not going to be able to keep doing that. Volumes are already dropping and drying up for General Mills. And that's considered consumer staples. So the consumer is tapping out on some of these things. That's what I was paying attention to with this. So what I'm going to be watching for, though, is a break. Because I think this thing's easily going to reconnect with the 200 over the next few months. So if it does get any kind of rally, it would be fantastic for a play. But if we don't get much of a rally, then I'm watching for. First warning sign is roughly breaking below the 50%, and then it starts getting much more aggressive on a close below 80.48. So they are starting to, yeah. See, this is what I'm telling people. Also, people go, I don't trade General Mills. Why should I care? because it's going to give you insight into a potential macro for next year. That's why I pay attention to these consumer oriented stocks, even if I don't have a position in it. Because it's very eye opening to what could be going on next year. That's why I think the consumer is really going to have to tap out, and we'll get into some very interesting conditions. So yeah, GIS using market share to store brands. I I don't think they said anything of that exact line, but that's what I imagine. Also, shoplifting of food is going skyrocketing, and that should tell you something too. Somewhere tomorrow morning, get a pop on Tesla. I'm expecting a pop at some point. Other things to look at. We haven't looked at the yield curve in a couple of days, but this was an inverse. I had it on. I just forgot to look at it with everybody here. We got the close that triggered the head and shoulders back on Friday, and then, well, I mean, it's pretty much done. So we've had some substantial steepening with the head and shoulders. Now, this is a pretty well formed head and shoulder, inverse head and shoulder, I should say. If you're looking for something to, all right, is that a head and shoulder? This is a really nice pattern. Why? Because you have pretty decent shoulders. You have, it's not necessary, but you have a really nice clear path move. It's reversing this. So if you wanted to take a screenshot of something to say, okay, what's a decent inverse head and shoulder look like if you're trying to find something really nice? Okay, this would be a screenshot to take on your trading platform. Shoulder, head, shoulder, neckline, break. All right, just wanted to point that out. We had some comments. The 10-year sitting here, climbing slowly after, I love this stuff. Look at this. Hitting with that double bottom after the double top played out fully. This is actually nearly, this didn't rally enough in here, so this was considered on the daily one side of a bottom. It almost got invalidated, but I'm still watching for some potential climb in the yield. Look at that, against that 50% harmonic. Let me pull off this other thing, but against that 50% harmonic. So I'm still watching for a potential climb in the yield back to possibly about 3.83%. And then I'll be watching for another rollover play. Look where that 200 is also, with the right at that 62.5. Just pointing out something there. I think that's about it. Where do we sit? 33% of adults age 65 and up report applying for food stamps and visiting a food pantry over the past 12 months versus 22% in 2020. It's climbing. Thank you for that information. Next year will be brutal for many people. I do agree. Kramer broadcasting from the Florida NYSE for Mad Money is rather ominous. Is it now where he broadcasts from? So are we going to go into crash mode like in the next couple days? Do you use harmonics to validate the head and shoulders pattern? Yeah, there are some harmonic levels you've watched. I've not released them that I watch. I've not released those yet, though. I think that's about it for today. Not seeing anything else. Let's just peek in at Micron. Micron. I mean, it's done the We haven't looked at this in a while, but remember when we were looking at it, we got the close above the 62.5, stalled out at the 87.5. I didn't put it on this charting platform, but we flipped the harmonics around. The close back below the 862.5, target the 87.5. Sorry. The close back below the 62.5. Right here. And by the way, I like for downwards, I like the red close. Okay. Right here, little bounce up, and then pretty much peg the 87.5 today. So I'm watching for a potential short-term bottom thing coming in with the earnings. But there's at this point no great statistical play anymore. In case you were looking, and there's no bottoming formation just yet. I'm watching for one in here, but we just essentially completed the round trip back to the 87.5. So there's no great setup going into earnings. Is there a sloppy inverse head and shoulder on the 1 hour RTY Russell? Oh, why did I get indicators? Oh. There we go. Yeah. Shoulder, shoulder, yes. This is also a good example. Slightly downward sloping neckline. This is decent. Shoulder, nice shoulder. Get the targets. Remember, project them from where the neckline breaks. And so it stalled out multiple times, just piercing through to stop reduction. So your next two targets, and this is nice too. I was not looking at the 1 hour Russell, 70 or the 1 hour E mini Russell, 1772.6 to be exact, but I just used 1772, and then major at 1778, and it's reversing this move, so you are good to go. All targets, especially the second and third one, within the move that started it, and it actually returning to a key harmonic in addition to the targets. So yes, that is valid, Sterling. And if you want a nice walk-away stop level on a nice walk-away stop, if you wanted to use that versus the harmonics for trailing the stop, it would be this upward sloping trend line. So a close back below it would invalidate it. If you want the harmonics, at this point it would be a close below 1745.30. But so more aggressively would be the trend line. Yeah, there's this little potential double. So if you wanted a more aggressive stop, you could use the double trigger as a stop. If that would be the most aggressive stop. So that's where we sit. We got a couple bullish patterns. Again, these are very short-term bullish patterns. Potential. We got the potential on the S&P with some more upside. We got some more upside potential on the NASDAQ. You got the little one on the Russell. Okay, so you do have some follow. Now, does that mean you just go to bed and wake up in January? And no, these could be completed tomorrow. So, or Thursday, worst case, especially in the Dow and the NASDAQ, even with a close tomorrow, even with a close tomorrow, above today's high, it's just a follow through potentially to the declining rotation zone. I'd really be focusing on this breakdown area too. Mike, you come up with some interesting numerology things. Very interesting. I knew none of this before I turned into this channel. Stick around and Mike will make you a trader. Well, I hope I make you give you some concepts that can make you better or even a better investor. Remember, these concepts can be used from an investment standpoint on a daily/weekly time frame. You just watch for patterns and setups on daily and weekly time frames. That's how, the best setups, especially in a bull market, are weekly time frame setups. Weeklies for investments. So it's not like you have to trade with this stuff. You can use it, especially once we get back to a nice bottoming market and some decent market rallies. There, you can trade just off the weeklies from an investment standpoint. I think most people should, from an investment standpoint, trade off the weeklies and fine tune things with dailies. That's about it. Now, from a trading perspective, yeah, you can go way down in time frame. But even from a swing trading perspective, you don't really have to go below a 4-hour time frame. So it's just nice. Why do we focus so much on some short-term stuff here? Because we get to discuss so many patterns. It's really nice to discuss stuff that people can see how it plays out day after day, whether they're going to trade it or not. You get a lot more instruction by going through these shorter-term patterns, the shorter-term setups. So, thanks, CD. Thanks, Ted. Well, Ted, couldn't agree more. Thank you. With that, I shall chat with everyone tomorrow morning. Remember, nothing major. Let's just peek again. Let's just remind ourselves. I always like to double check. Nothing. You got 6 a.m. the mortgage information coming out. 7:30. You just got minor current account deficit. Not going to move the market at all. 9, after the open, you got existing homes. The only thing that could be interesting to a very minor perspective is the consumer confidence at 9. And that's only if it's an extreme miss or beat. And then if you're trading oil or heating oil or gasoline or anything else, you got the numbers at 9:30. Other than that, it's a very quiet day tomorrow, which is why we could potentially see some follow through. I think the market will still, because of thinner markets, I know Bob's not as worried about it, but if you're trading short term, I am still very interested in Thursday and Friday numbers, especially with thinner markets. So I'll leave it at that. Everyone have a fantastic day, and I shall talk to everyone later. Bye for now.